Hey, it's Paulo Brands with your Monday market update. Let's talk a little bit about interest rates. So why would you watch this? If you're looking to refinance, get out of the higher interest rate that you recently got from purchasing a home, or if you're thinking of buying a home, you really want to pay attention to this because I'm going to share with you what to expect with interest rates. Especially in this video, we're going to talk about what happened last week, why the rates improved. We're going to give you some future predictions from about 7 to 8 sources of where they expect interest rates to be. Now, this is really important. Have you ever been on Zillow or a social media platform or just looking at a house, you requested information, then you got bombarded with calls, texts, emails, just all this unwanted communication? I got something for you. If you want to search for properties in private and only get responses or people to reach out to you when you request, you're going to like this. You're going to like this. I promise you. All right, let's go ahead and get started. Let's bring up the interest rates here. You're going to see the 30-day chart. If I can find it here, you can see how since over the last 30 days, the interest rates started peaking up. They went down, then they went up. But about March 7th, we started seeing some improvement, which has been good. So last week, we had some improvement in interest rates. I'm going to share with you why we got that improvement. And it has to do with the jobs reports, by the way. A common question I get with interest rates. So here's about the average interest rates. I'm going to bring this up. This is super important. So when I would just send out one rate, let's say just on conventional, and then people would lock in a loan, they would always ask me, why is the rate that you're giving me higher or lower than the one that you talked about on your weekly rate videos? Well, a couple things. Number one, rates change on an hourly basis. But number two, more importantly, the interest rate that you're going to get is based off of your credit score and the amount of down payment. So let me take a look here. So let's go ahead and take a look at this graph here. If you look all the way on the right, you're going to see FICO score greater than 740. The light blue is if you put less than 20% down. The dark blue is if you put more than 20% down. So if you have two borrowers or two friends that both have the same identical FICO score, but one puts less than 20% down, one puts more than 20% down, that one that puts more money down is going to get a better interest rate. Doesn't mean that, that's just how it is. So if you want to put yourself in the best position to get the best interest rate, more down payment, better FICO score. More down payment, better FICO score. All right, so there you have it. All right, so what fueled last week's interest rate rally here? And what happened is the BLS jobs report came out. Remember, the Fed is so focused on inflation, and a main driver of inflation is employment. So the stronger the employment, the perceived higher of inflation. You've heard me say this many times, so I'm not going to go into it. So in other words, let me reverse that. In order for inflation to come down, people have to lose jobs. So the jobs report is extremely important. Now, even though hiring was stronger than expected last week, or in February, downside revisions cut 167,000 jobs in December and in January combined. That is huge. And what that is, that's a kink. That's the break of the employment that the market was looking for, and that fueled 30-year fixed rates to improve. Now, let's talk a little bit about, speaking of improvement, let's talk about where mortgage rate predictions for 2024 are expected to be. So I'm going to read about 2 or 3 of these. If you want the full list, feel free to email me. I'd be happy to give them to you. But let's go ahead and start from the top and work our way down. Freddie Mac came out and said that with the current stance on monetary policy holding steady, we expect mortgage rates to move sideways, remaining above 6.5 through this quarter and drifting down to about 6% by year's end. Fannie Mae came out and said 30 years housing rate will average 6.3% in Q2 and slowly decline over the year, landing at a Q4 average of 5.9. So, at the consensus is just on the top 2 that by the end of the year, we'll hit about that 6% interest rate. If you want the full list, feel free to reach out to me. I would love to send it to you. All right, let's go to how you can search in private. Let me share with you. Welcome to HomeBot. If you want this, just send me an email and I'll send you the link to sign up for it. It's really awesome. I'm going to add an actual stage here. I'm going to bring this up. So what it does, This is actually me, right? So I was looking to buy in Northeast Nevada, then also in Truckee area, and it tells you the temperature of the market. So Nevada is relatively hot; it's at 81%. Where Truckee's starting to slow down a little bit at 67%. It allows me to. Is this going to go? Yep, it allows me to. It also tells you like a smart buy versus fair buy, but it also allows me to search area. So let's take a look at Nevada, and here's all the listings that come up. So these are the things that you get online, but you get to search in private. In other words, you're not going to get bombarded with phone calls, which, you know what? That's pretty awesome. People deserve to get the information when they want it and not when they don't want it. So yeah, I hope you take advantage of that. Let me know. Last and certainly not least, hopes and dreams. If you want to sit down and have a 15, 20-minute conversation, we're not going to talk about credit pulls, pulling applications, documents, unless you want to. We're just going to put a plan in place. You guys, use my 20 years of experience. Let me put a plan in place for you and your family. Going back to that slide with the down payments and FICO scores and interest rates. Let me put a plan in place for you that's going to allow your family to not only achieve homeownership, but get the best possible pricing out there. That's what I'm here for. All right, guys, that's it. I hope you have a wonderful week. This is a big week. One of the Fed's favorite measure of inflation is going to come out. I will send out some information when it does, and let's see what happens to interest rates. So